Get your free copy of the complete tutorial at www.teachucomp.com/free. As discussed in previous lessons, a large part of a manager's job is planning. Budgeting is the main tool managers use for planning and for having financial control. A budget is defined as a formal written statement of a manager's plans for a time period in financial terms. Budgeting has many benefits for an organization. They are: it requires management to plan ahead, it gives definite objectives for all levels in the company, it creates an early warning system to prevent potential problems, it facilitates the coordination of activities, and it results in management awareness. It also motivates employees. Next, we will discuss budgeting basics and how to create effective budgets within an organization. The length of the budget period is very important. Budgets can be prepared for many different lengths of time. Sometimes, budgets cover an entire year, or they can cover multiple years, or they can be shorter. The length of the budget depends on the type of budget, the nature of the organization, and business conditions. For example, the cash asset may have a monthly budget, while plans for expansion of a company may cover a 10 or 15-year period. Budget lengths should be carefully planned. They should be long enough to provide an attainable goal, and the time period should minimize the impact of seasonal changes. The most common period is 1 year. Companies will also usually have an annual budget as well as monthly budgets in order to keep them on track. Having an effective budget is very important. Effective budgeting requires that a company has a sound organizational structure, effective research and analysis in order to plan out the financial budget, and acceptance by all levels of management. Also, once the budget is in effect, it should be used as a means for evaluating employee and manager performance. Accounting history of a company is essential for effective budgeting. Companies use historical accounting data from past revenues, costs, and expenses in order to determine budgets and organizational goals for the future. It is important to understand the relationship between accounting and budgets. Accountants typically work closely with management in order to translate management's goals into financial information so that goals can be communicated throughout a company. Just like there are different financial documents that show snippets of financial information in a company, budgets do not tell the entire story. The master budget is the document that contains all budget documents and combines them into one report. Master budgets contain operating budgets, including goals for sales and production, and financial budgets, including the capital expenditures, cash budgets, and the budgeted balance sheet. Here is a chart that outlines the different budgets in the master budget and their interrelationships. Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.